Hi and welcome to the 10th issue of my newsletter. Today we will talk about trend lines, resistance and support levels. Retail traders, hedge fund traders, bank and institutions, everyone, they all rely and look at these important psychological levels. Once you learn how to use them correct, they will become one of your most useful tools. Trend line, support, resistance. So we will talk about how to draw a trend line, how to spot support, resistance, and how they switch each other. How to trade all of the above. At the end of this presentation and video, you will get an amazing gift called the DTE, Dynamic Triple Edge Strategy. So there are two basic types of trend lines, main trend line and inner trend line. The main trend line is the one that comes from the top or bottom and there are no candlesticks beyond it. On the other hand, we have inner trend lines which come from when the move is strong and the price refuses to drop to the main trend line. I'm going to cover inner trend lines in this video, but it's important to mention them as well. Okay, so how to draw the trend line? As the name suggests, trend lines could be a great way to determine the trend direction on the market. They are more efficient and reliable when applied to a higher time frame of the one that we are actually trading. It is extremely simple to draw a trend line and I'll show you how. These lines are self-fulfilling, dynamic support and resistances. Why? Because the market is moving according to the trend and every time it bounces back, it respects this dynamic support resistance. You will be amazed how well they work once you start working with them. Okay, so in this example, I'll show you how we draw bullish trend line, which is when trend go up, and bearish trend line when trend goes down. So let's see. Find a top or bottom on the chart. This is the starting point of trend line, any trend line. Once you select the trend line tool from your MetaTrader 4 platform or any other platform you use, click on this top or bottom and start moving the mouse towards the price. Let's see an example of a bearish trend line. I start right here. Okay, I'm selecting this kind of tool. Okay, this is called a trend line. I put it on the very top. And then I start moving the line towards the price until it reached the next top. Now double click the line in order so you can move it. Now that's how it looks like after you did it. That's all. Okay, that's your trend line. Now keep in mind that for a trend line to be confirmed, we better have 3 spots, touching points. The rule of the thumb is that the more time the price has bounced off the trend line or visited it, the more reliable this trend line is. Now let's see a bullish trend line. That's how we start. Okay, we selected the trend line, of course, here, you remember. Now we put it on the bottom and we draw to here. Double click on the trend line, of course, so you can move it. Once you did, that's how it looks like. That's your bullish trend line. The more spots, touching points, the better. Now, how to spot a support level? Support and resistance levels in their core have the same idea, okay, and the same purpose, exactly like trend lines. Now, they all point out stiff market zones that the price has trouble breaking through, right? Makes sense. The only difference here is that support and resistance levels are horizontal levels. One more thing I will tell you, okay? Support, resistance is never a level, it's a zone. Remember that. So we apply the same rule. The more times the price has touched and bounced off the support resistance level, the stronger this zone is. Another extremely important fact to remember, as I said, support and resistances are zones, range of pips, not just a single line. Because the market is not always Mr. Perfect and not always will reach any specific pips level. Sometimes it's creating some kind of a range. Let's take a look in a second how it looks like. Once you spot such strong level, keep in mind that this zone called support when and as long as the price is above it, resistance every time the price is below it. Okay, so in this example, while price below this kind of range here, you see this is range, two spikes, two spikes here, that's why it's a range. As long as it's below, we call it a resistance. Once it breaks it, it becomes a support, and that's the beauty, how support could turn to be resistance and vice versa, and how they respect each other, and that's how we create zone. Take a look on this example. It used to be a resistance many times here, broke up, down, and again respected, 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 respected. Okay, that's how powerful it becomes. So how to trade trend lines and support resistance levels? There are two ways: bounce and break. So the bounce, wait for the price to reach trend line or stop loss resistance. Let the price bounce off it. When the retrace takes place, look for an entry. A. Enter once the price breaks the high-low created. B. Draw a trend line of the correction and wait for a break. Sounds complicated? Not at all. Let's take a look on this bearish setup example. We spot a trend line, 1, 2, 3 spots. Then we spot a trend line connecting all these bottoms here, right, as the correction. Once we break below, this is our entry. We can, of course, enter more conservative with the break of this bottom, but it's great enough to enter with the break of the trend line. It can go like this, the more spots we connect, of course. Once we trigger, we are in. I prefer this approach for one reason. That's what will allow me to get better risk versus reward trades. Good point. Let's take a look on a bullish example, and here we go. 1, 2, 3 spots of a beautiful trend line. Now we select the last correction, okay, and we draw the line. Once it broke above the trend line we are in it, we can of course rely also on the last high for a break. But last high, stop loss would be bigger. That would be stop loss with the break of the trend line. That would be stop loss of the break of the high. So that's why I prefer this kind of approach. It gives better risk reward ratios. So that would be all as for now, my friend. Don't forget to download your gift. You will enjoy it, guaranteed. That's your gift, DTE, Dynamic Triple Edge Indicator. You'll get inside every single piece of information you need in order to master it. That's our contact details, my Skype and the email below, support team email. Feel free to contact us. We are here for you for any issue. I want to thank you very much for your time watching this video. I hope you enjoyed it, and I'll see you again on the next issue. Yours, Vladimir Ribakov.